Well, the RBA minutes came out at 11:30 and the market promptly decreed that they were dovish, as opposed to hawkish, which is the ornithology of monetary policy. Having fallen below 68 US cents earlier, the dollar managed to scramble back to that level of 68 tonight. The actual words in the minutes were more entrails of a chicken than dove or hawk, of course. They said that the June decision was a close call and they reckon we're still traversing the narrow path that has inflation coming back to target with unemployment rising but still staying low. That is, no recession. And the fact is that the burst of post-pandemic global inflation is over. Now, this graph shows the combined consumer price indexes of the US, Europe, UK, Japan and China. It's been falling for 6 months and is almost back to 4%. Now, Australia won't necessarily follow suit, but we don't normally swim against the global tide. RBA Deputy Governor Michelle Bullock gave a speech today in which she reiterated the Reserve Bank's view that unemployment needs to be back at 4.5% to control inflation, so another 140,000 or so people out of work. She called that full employment, even though unemployment is now 3.6%. So what's that? The share market produced the 7th rise in a row with decent gains by banks, miners and retailers. Radio business Southern Cross Media jumped 20% after it emerged that another radio business, ARN Media, had bought 15% of it. And it happens that a Bermuda-based investor called Orbis Investment Manager is the biggest shareholder in both of them. New York was closed for Juneteenth, while Asian markets fell today, and not much happened on commodity markets. And that's finance.